Today's top three things in my notebook. Number one, the euro. Number two, oil. And number three, housing. So first we'll just hit on the euro, which is burning this morning. So again, if you took last week's sell-off in the US dollar as a buying opportunity in dollars, so again, you bought the US dollar, whether you used the UUP, which is ETF, or you bought US dollar futures, or you bought the US dollars, wherever you want to buy US dollars, or you shorted the euro versus the dollar, that was all the same call. So again, why is the euro burning? Number one, it failed at immediate term trade resistance, which is 110. Number two, the economic data was underwhelming. So if you look at what happened in Europe overnight, they actually had to report the economic data again. You hate when that happens. But the reality is that they had to report inflation, which is still deflationary, CPI minus 0.1, and they reported unemployment that actually bumped up 0.1% month over month to the Eurozone of 11.3%. So underwhelming economic data, big stock market ramp. Does it sound like Japan? Yes. The economic realities in Europe and Japan are what they've been, and money printing is not going to change that. But again, your job is to trade the market that's in front of you. So again, the currency call is the easiest call to make. Shorting euros and buying dollars. We've been on top of this for the last 8 months, and we'd reiterate that this morning. Now, point number two is oil. If you get the dollar right versus the euro, and you get oil right. So oil's down 2.5% this morning. Oil's down 11% for the year to date. Oil's down over 55% for the last 8 months. This is what it is when the dollar goes up. And I'm smiling because, of course, we're not long oil. We're not long energy stocks. We're not long high yield or junk bonds or MLP stocks, levered to all that stuff. In fact, we're short of that in those very terms. So again, what we like is oil on the short side on bounces. So when you get to the top end of the range on the macro show on Thursday, you heard us say this, you bought dollars and you sold oil and anything that looked like oil. So again, yesterday in real-time alerts into the bell, we also reissued a sell signal in XLE, which is energy stocks. Again, it's all the same call. Get the dollar and the euro right, you get a lot of other things macro right. Now, finally on housing. Now, if being bearish on one thing, being bullish on another, imagine that. Being bullish on housing with the weather. Yeah, we had that call. So again, pending home sales yesterday were very good. Guess what? They're going to get very, very, very good. So again, much unlike the Japanese news yesterday where they said things were very huge in terms of the sell-off or the lack of demand in the housing market in China. In the U.S., there's very huge demand here in the U.S., and it's accelerating. So again, as the thaw, this is a really critical call. I learned this one in school. As the snow melts, you will get an influx of demand of home buyers. They will come across the Northeast population with their checkbooks open and their easy money printings alive and well, and you will see more home demand. Can you imagine that? ITB, which is a great way to play housing, instead of being long the S&P, which is kind of up 1% for the year to date, you're up housing, which is up 9 and making new highs. So again, ITB is the ETF there. So those are top three things.